So thank you, everybody. What we wanted to do is kind of, before we pass over to our American friends, if I can call it like that, because Chris and Carlo will join us from Florida and Faria from somewhere out there. We thought I wanted to bring some of the themes of today together again, which is not looking at specific aspects, but looking at how the ecosystem between technology providers and financial services regulated entities will evolve and what that means for supervision and public policy. Of course, the first example that we had, and we talked about a lot today, is DORA. I don't know whether, Sebastian, I can start with you, how you see kind of the implementation of DORA and what it might tell us about the future ecosystem between technology and financial services companies.
So thank you very much, and hi to everyone, and thank you for the invitation. And first, it will be quite a challenge for people like me and my colleagues to supervise, to implement DORA at our level. And I guess as it is a challenge for financial entities to implement it. But in my view, it was necessary, and the choice has been made at the European level to have something quite general, so that the overall level increases, trying not to be lowered by loopholes. And I mean, it fits perfectly well with the development of financial services, relying more and more, and sometimes very extensively, on non-financial entities. And of course, we think of technology companies, but beyond cyber, beyond technology, beyond data providers, beyond all that, we also might think about much more traditional things like electricity providers, for instance. Then you might have some difficulties. So operational and digital resilience is key. So when I say it will be quite a challenge, it's because financial entities, as for market regulators and more globally financial regulators and supervisors, we have not internally all the resources right now. So we need to develop that kind of expertise. And sorry to be pragmatic, but that's my first challenge. Second, we need to rely on information that was at the time missing, and missing also, I believe, within some financial entities, that is to say a mapping of entities with which they contract, on which they rely, and on which they can make kind of a cartography of risks coming from these providers. And it's kind of a change of perspective. Before it was meant, okay, financial services providers, the big ones. Now we see that also in relationships, it might not be always the case. And that's a humility lesson also for market regulators, financial regulators. At the same time, legislation, policymakers have given us a responsibility that we need to fulfill. And so we need to have the means to do that. Then, and maybe last point, it's really about DORA being quite exhaustive. We have big players. We have also not that big players. And that will be quite a step to pass. And okay, it has entered into force a few weeks ago. We have to wait April and May for the European level to be prepared. So it's through steps. Just to say that we have tried at our level within AMF to prepare. And when I think of cyber, we have done non-repressive control inspections, what we call, to check ability of some financial entities under our remit, how prepared they were to cyber risks. And at the time, it was not really great. And in the meantime, we know that cyber risks have increased in frequency, in terms of intensity. And so, I mean, we see that it's really ongoing process. So we really welcome DORA, but we recognize that it's quite a challenge for everyone, including ourselves.
Thank you. And maybe I can pass on to Manuel as well, because you see the transformation of your industry, your financial service industry, becoming more digitally integrated. And there are a lot of smaller players, specialized players in the market. So how do you see it from a Portuguese perspective?
Yes, thank you. Thank you for inviting me for this very interesting conference. My view is, let's say, a global view, not focused only on my national experience. I think that currently SUBTEC tools are much more used for back office functions. To analyze data, to report to the regulators, for internal controls. In the near future, I think there is a trend to expand the use of SUBTEC tools and even AI to support investment decisions and investment advice. This is a trend that has increased, and my expectation is that this will be increased much more in the future. And if we look to the present and to the current situation, we saw, and it is not new, the levels of HFT tradings, HFT transactions in the markets, and we see also the models of neo brokers. In the future, and I think it is also a trend, AI SUBTEC tools will be used to know more about the clients, to identify the needs of the clients and the preference of the clients, and to allow financial firms to offer them tailored products. In relation to small firms, I think there is enough space to small firms with local businesses based on mutual trust, on the personal knowledge of the clients, and the clients want also to interact directly with the firms. And I think there is space enough for this kind of local business, despite the levels of digitalization. Just to conclude, to say that as a regulator, my expectations related to digitalization and to financial firms is that the financial firms should identify, should understand and manage their new digital risks, even if it is the case, the risk of the absence of digitalization developments and the impacts that this lack of developments in the area of digitalization could have in their business models in the long term. And I have also the expectation that the levels of investor protection and market integrity will remain and will increase with digitalization. and despite the level of digitalization in the businesses, and despite the level of outsourced services, as a regulator, my expectation is also that the full responsibility of the business remains on the investment firm, on the management board, on the compliance function.
And Stephen, in a way, you're one traditional, not traditional, it's unfair, but as a subtech player, you provide kind of risk management services, fraud detection services to a lot of financial institutions. How do you see the ecosystem evolve at the moment?
So I think when we look at it from our point of view, we're seeing, so I guess maybe to put a bit of background, what we do as an organization. So LexisNexis Risk Solutions focuses really on two different types of offerings for financial institutions. The first one in financial crime and compliance around transaction screening, sanctions, PEP screening. That business has existed for a long time, helps financial organizations meet their compliance requirements. What has evolved, I think, is our second business, which is more around fraud. Fraud prevention in the digital space, in the digital payment space, is something that has really grown over the last few years as fraud challenges for financial institutions has evolved. So we see a shift away from in-house capabilities to really outsourcing this, really because fraud has evolved. So historically, fraud was what we would call third-party or unauthorized fraud as the challenge. People would gain access to our accounts through stolen credentials or credit card payments. But then through the pandemic and also through the introduction of regulations like strong customer authentication, there's been a shift in fraud around convincing victims now to actually move their own money out of their account. So authorized fraud, or APP, authorized push payment fraud. And that has been a challenge for historic fraud providers who potentially in-house systems are not able to respond to that. So that's where outsourcing those capabilities to providers who are able to have flexible models to address different types of fraud and also have access to a wider source of data has really brought that market to the fore from an outsourcing point of view. So I think those are the changing opportunities and offerings that we're seeing becoming more important now for the FIs.
Thank you. I mean, Sebastian, yeah, let you have a glass of water while I phrase this, but I mean, we have a well-established outsourcing framework in place for many decades. But I guess the new environment or changing environment is putting pressure on that. And you already said that supervisors need to look at different parts of the eco chamber and supply chain supporting financial institutions. What do you think it may mean also going forward in Europe for the oversight framework and for the outsourcing framework?
Sorry. Sorry.
No, not at all.
No.
Shall I come back to you in a moment?
Yeah. If that
Okay, no problem. Then I might ask the same question of Manuel. Maybe we come back to you in a bit later.
Yes, related to the regulation and the level of regulation that we have, in my personal view, I think we have enough regulation at this stage. DORA has just entered in force. We have to adapt ourselves to DORA, to apply, to supervise DORA. And we have also, as you said, the outsourcing regimes and the outsourcing principles. And this is not new. We have years of experience applying outsourcing rules. Agreements between financial firms and technological firms are not new. We have years of experience in application of these rules and in supervise these agreements. What is new is the level of agreements and the intensity of the agreements. And before we think in issuance of new regulation, we should have in mind that, for instance, supervisors have several tools, supervisory tools, like the issuance of guidance, facts, interactions with supervised entities to deal with these new realities before we step in new regulation. And just to conclude, I think that we should avoid regulatory costs. These regulatory costs are not only for private sector, but also for supervisors, for the regulators. We should regulate, and the political options should be adopted according to simplification principles, and also according to proportionality. I think we have a lot of regulation and a lot of new regulation at this stage.
Thank you. You okay, Ken?
Yeah, and I will be short. Thank you. No, I would largely agree, so I will be short. I mean, DORA is quite a step, as I've explained in the previous round, and we have to succeed in passing this step before thinking of another one. First, better knowledge at all levels. Second, we were used to deal with outsourcing, but here there is an increase in the knowledge of the outsourced functions, and it's really needed. Third, DORA imposes some criteria in some contracts, and that's also a step into improving the level of what is needed. And really, my message is, regulators, we face the same challenges than financial entities. And in that regard, I believe that DORA is here to help the overall confidence that we can have together in the financial system. So, I mean, really, it's an help for a supervisor like AMF rather than a difficulty, but it's a challenge because we're at the very early stage of that. So, I mean, we need to work on that for the coming months and years.
Thank you. And I think both of you have pointed out or alluded to the fact that actually these relationships are ultimately very beneficial. We've talked a lot about competitiveness, we've talked about burden reduction. The whole idea, of course, of outsourcing certain functions from an established financial institution into a third-party provider is to draw on their expertise, their capabilities, and so on. And so I think we should look at this as part of the compliance, regulatory burden reduction. Thank you. Maybe the same question to you, Stephen. What would you like to see in the public policy space that would make your work easier?
Yeah, so to identify fraud in a transaction, you need to understand the context associated with that transaction. So imagine in an account takeover scenario, a fraudster may be looking to change the email address or the phone number associated with your account so they can directly get messages back. In an authorized push payment fraud scenario, the fraud model needs to understand the beneficiary account number. Where is the money going? Because it's the victim themselves moving their money. And herein lies the challenge when it comes to actually implementing these solutions for the FIs. While the financial institutions want to build these models and use these models, country-level bank data secrecy acts, GDPR, all around the world, there are different regulations around what data can be shared. And as you then implement at the bank, the business and the data privacy officer have very different ideas on the approach and what should be shared, to the point that really the data privacy officer starts from the position of, we share nothing, does it still work? So I think for us that's the major challenge, and what we see around the world is that those models work better in some countries and even in some clients and others, purely based on that internal struggle between the different stakeholders in the bank and how much is shared. So I think what would help us and vendors like us as fraud is outsourced is to have clearer guidance around, whether it's in PSD3 or where, what data should explicitly be made considered available to be shared for fraud processing by third-party providers, so that the business, when they talk to the privacy office, have a starting point for discussion. At the moment, it's too generic, it's too general, too vague, and it's very difficult then to ensure that your models actually can deliver what ultimately can be delivered with them.
I think in the interest of time, if I may, I might call it a day on the panel, and also to give Sebastian the chance to kind of recover a little bit. And I see importantly that Faria is here. So maybe I leave it and thank you. And we will pick this certainly up at the beginning of our next conference again. Thanks very much for being with us. I'm only using you as an excuse to get